Okay, welcome everyone. We'll start our lesson 2. Today lesson will go through LO2 learning outcome 2. At the end of the lesson, I'll send you and share with you these slides. And today lesson will do a bit recap what we learned during our last lesson first. And please, if you have any particular question, always ask, we'll try to adjust or any point, which further we need to clarify, which we can go through. Okay, welcome. Thanks for joining. Okay, during last lesson, we discuss about resident, who is the resident. We discuss about the tax rule, resident, and we discuss about residency, and then we had a discussion about the tax rate. We discuss about employment, saving income. We discuss about inherent tax. These were the key, the points those we discussed during our last lesson. Then we link to the Financial Act 2023. Couple of slides were, of course, was showing all which we tried to rectify those and use, most latest Finance Act, which is better to use the latest one. But I demonstrated how we can apply to these, the Finance Act 2023 rates. Okay, for assignment purposes, always doesn't matter you use the Finance Act 2023 or Finance Act 2021, 2021, and 2022 can be, but please, just a matter of, whatever example you refer back to the Finance Act, that's quite crucial, really, we need to, and then we can refer correctly, the Finance Act. Okay, welcome. Thanks for joining. I shared with you the document, which is, of course, I mentioned you during our last lesson, opentuition.com, and we said, we can FTA financial tax, the subject, which is 6 exam, and I shared with you the booklet as well in our WhatsApp group within. Hope you received this. And it's always good to use, the latest rates. Okay, welcome. We'll start, please. Always good to be reflect scale 1 to 10. How much we know the tax, always your own reflection, then we'll carry on learning and carry on looking how we can apply these in terms of our assignment for assessment, because it's not exam-based course, it's the only assessment, and assessment is you can add the examples which from the booklet are the examples we'll include during our lesson. But when we'll do the assignment discussion, we can pick more examples accordingly as well, and we can embed those in our assignment according to the assignment brief. Okay, we'll start. Welcome. Today lesson indicative content really will go through identification, the key advice required to supply the tax application, really applicant, which will go through applicable in the certain situation, and we look the Finance Act, the rates as well. For assessment, we look around each the course of action at the advantages and disadvantages of moving the capital allowance and things, a personal allowance from married couples to, and thus how the tax bill can be reduced. Okay, so we had discussion about the scope of corporation tax, total profit, taxable profit. Today lesson will be focused on the value added tax as well. That will be the key. Okay, as we look the new rates, this is Finance Act 2023 according to, and the rates is basic rate is £1 to 37,700 is a 20%. The personal allowance 12,570, and we can look around state the rate of 0% apply, which we can look around the saving income nil rate band, the basic tax rate if you earn the 1,000 through the saving income, the nil tax, there no tax will. If you are the higher taxpayer, like you pay, your earning is more than 37,700 after the personal allowance, then of course you will be clustered at the higher tax, and then of course your up to £500 and saving income is a free. Dividend up to 1,000 income, if you have to dividend income is nil, no tax on. If you have more than that, then we can charge the tax according to the dividend rate. So what is the dividend rate? So 8.75% if you earn within 1 to 37,700, and if you earn more than that, 33.75%. If you earn more than that, then of course you're 39.35%. So these are the dividend rates. It's really crucial, be well aware of how we can apply the rate. Anybody, any question, please? You can carry on asking. Huh? You can stop me and you can say and you can ask, please. Or if you like to add your own experience, absolutely fine, please share. Huh? Because a couple of you already working in tax, day in and out, you're dealing with the clients and you always up to date with the rates, of course. That's always good to be shared. Okay, so personal allowance, which we just mentioned, transferable amount 1260, which we can transfer, marriage allowance, and income limit 100,000. If you are earning more than 100,000, every pound extra will be divided by 2. Your personal allowance will be reduced. Okay, where adjusted net income is 125,140 or more, the personal allowance will be reduced to 0. So it means you're not entitled to claim the personal allowance. Okay, so days in the UK, automatically not resident 16 to 14 days. Yes. So if the UK ties are more, automatically not resident. If your resident, if 3 ties are more in the UK, so we can look around your domicile and all, family ties and all properties and man house and all these, the rules, we can look around each individual case as well. So that's quite good to look around when you're charging the tax. Okay, the benefit, of course, that's which we can look around child benefit or any other, which we can, according to the scenario, which we can apply these rates accordingly. Okay, of course, in terms of the car benefit, electric cars, car fuels, benefit 27,800, and we can look around the benefit of the van. We can look around the pension limits, annual allowance, minimum allowance. So we can look around these benefit, authorized mileage allowance 45 pence plus 10,000, and motor car, yes, according to their CO2 level, the rate apply. Then the corporation tax, of course, that's also quite good to look around because the main rate is 19%. Is further, is going to be 25%. Yeah, so we can look around main rate, upper rate, lower rates. Yeah, small profit rate is 19%. Okay, so lower limit is 50,000, upper limit is 250,000 or more. Then of course, we can look around fraction 3 divided by 2, so we can calculate the marginal relief according to the formula as been suggested. So that's, upper limit minus augmented profit, including the benefits, any benefit fine, that adding back, into the profit, and the standard fraction 2 divided by 200, which is, this is known as the standard fraction. Okay, that's we can use. Okay, then profit threshold, quarterly installment, value-added tax VAT is 20%. If your turnover is at the sale value total is 85,000 or more, then which is a compulsory to be registered. And if your 83,000, you can deregister it. Yeah, registration. If you want voluntary registration, then of course you can as well. Depends sometime. It can be because you want to be 0 rated. So like builders normally charge from the client. Builder normally pay on the which is the purchase invoices, any material they buy, but actually it's not being charging from. So it can be 0 rated sales, but they are paying the tax on the material. Then of course, they can claim back all money if they're registered. If they're not registered, that's why it's good to be registered as voluntary. Okay, penalty for the late payments, of course, we can look around the rates accordingly, and we can apply inherent tax 325,000. Resident nil rate band is 175,000, which we can look around exact death rate and the limit, and we can look around, how many years before the death, how much rebate is available, reduction in the tax rate, official interest rate. If company give you free money, like you can use and borrow money from the company, that's also coming, and the 2.5% is the official rate of interest. The rate of interest under unpaid tax is 6.5, and the rate of interest on overpaid is 3%. Okay, so capital gain tax, which we can look around on the lower and the upper rates of, and then according to the limit, investor relief is available uh, accordingly, which we can claim, according to the limit, and that's, which we can look around. Then of course classes, those we need to be keep in mind when we do. If deliberately tax hide, that's 100% maximum penalty according to which the outstanding tax, and if it's a careless is 30%. Deliberately but not concealed, that's which can be 70%. So we can look around. Okay, welcome. Let's 2.1, we have applied the tax to the given situation. So please, we can pick any example, whichever you like to pick, So I pick few examples. I can use more examples. I can show you to apply the tax rate in the given situation. So we can look around given situation first, and we can look around some rates, how we can apply it. So I shared with you the link in the past as well. I shared with you the document how we can apply the rates. That's and I'll go through the example within our slide as well. Anyone, any question, please? If you have, you can ask. So as we've been given the rates, allowance, and we've been given. So we can look around in this case. So we can look around for year 2023-24. June has the trading profit of 185,000. Our tax liability is, so we can look around trading profit. We have 184,000. We can look around personal allowance in the trading profit. We're not looking in that case, yes, we can look around the 2025 Finance Act as well, which we can include. No doubt, which we can, which we'll look, more examples, 2024-25 until 31st January. We're applying the rate 2023 and 2024 Finance Act. And we can look around after, of course, which can be, and which I'll demonstrate on these as well. Yeah, sure, I will. Okay, so we can look around the trading profit, and we can, because as we mentioned, 37,700 is 20%. Then we have 40%. Because in this case, personal allowance is not, because any income is more than 125,000, their personal allowance will come as 0. So that's the reason, no personal allowance, 20% tax, then we have a 40% and 45% additional tax. So total tax liability, if somebody earns 184,000 in a year, 69,000, that pay the tax. So this is the tax, but we can find, the look around in, so Finance Act. Always I'm trying to use, more ACCA example. That's so always good to be, which we can look around Finance Act 2024 and 5 and go through. And these, Finance Act examples, I'll share with you the articles and few examples. So here, the Finance Act 2024 and 25. Hope you can see. So as we mentioned, the rates not really change, it stay the same. So for this, yeah, that's absolutely fine. Whichever year, like even you're using 2022, which is absolutely fine. So you can say I'm using Finance Act 2022, 23. Yes. Uh, uh, yeah. So that's absolutely fine, David. You're absolutely right. So we can use it. So dividend rates, of course, we can look around the changes in the dividend rates. So like if we look 2023, so that was the rate 2023 and 24. And when we look, 2024 and 5. So these rates we can, and then of course, the personal allowance is 12,570, transferable amount is, and then of course, the rates, dividend, drawing, the benefits and all. So of course, we can each rates we can look around and whichever rate you apply, that's absolutely fine in terms of because we are doing assignment only. Okay, because examinable document, ACC exam point of view, they will leave, the document that's which year rate will be. So in that case, which we've seen, that's one of the examples which we can. So we can pick for assignment purposes, we can pick example from the booklet which I shared with you, which is absolutely fine as well. Okay, so let's in this case, trading profit is 159 during year. May made the net operational pension contribution 32,000, net gift a donation, and her income tax liability. So we can look around the trading profit. So personal allowance. So we need to be look around the personal allowance is. So we have that during the year, May net pension contribution, how much is 32,000 we have. And then of course, we need to be look around donations, because the donation we can claim, if because the tax is being paid, and from that, if the donation is being paid, so we can make adjustment equally accordingly. And then of course, we can look around in this case income tax 20% remaining and additional, and May's gross personal pension contribution is 40,000. So 32 ton 100 divided by 80, because the 20% tax being deducted at source. So her gross gift donation is 12,000. So 12,000 plus 32,000, that makes 50,000. So we can minus from 109,000 minus 50,000. Yes, that's which we can look around in a minute. So yeah, that's absolutely fine. We can use 20, 23, 24 for assessment purposes, because until 31st January 2025, because the last date of return is 31st January 2025, so we can use the rates, but for assignment it's no problem, whichever year, but you can refer which year finance act you're using, just for the sake of, if anyone looking really it makes sense of. Okay, so that's, of course, the personal allowance can be reduced, which is being, and that's just been made, that's why the personal allowance is there. So we can make adjustment accordingly, and I'll give you a few examples which we look within our PowerPoint slide we included, and those we can apply in different rates, no problem. Because the tax planning is illegal, we can look around how we can plan taxes, and the accountant can give advice. And as much, we have the knowledge about the tax, always good for, and of course, we have to carry on doing CPD, continuous professional development. Okay, so this is example of 2021 or 2020, doesn't matter whichever years, we can refer rates of those So the salary we've been given, we can apply current year rates on the same amount as well. So 46,500, the saving income is 2,000 and dividend income is 6,000. And during the year, he paid the interest 300, which was for the qualifying purposes. So Joe implied deduct, the pay as you earn at source, being deducted the tax, which is 6,800 tax being. So we been asked, the tax year payable by Joe in this case, which we can look around how much tax liability will be. So if I apply current year rate, so 46,500 is non-saving income, which is mean employment income. Her saving income is 2,000 and dividend income is 6,000. So her total income is 54,500 pounds and interest paid is 300, and we can look around uh, personal allowance, how much we have. The previous year was no, of course, if I'll use the current rate, it's 12,570 need to be minus. So 12,570 need to be minus if I'll apply the rate of 2023 and 2024. Okay, then if I look, the liability, because it's been asked, liability, I'm just picking, sake of example. So you can look around. First 12,500 was no tax. Remaining, we can look around 33,700, 20%. Tax 500 at zero. What is 500? Where the 500 came from? Okay, so let's, which we'll go back to examples. So we've been given here. So as example being given, we've been given dividend. During the year, he paid interest of 300, which was qualifying purposes. So qualifying purpose, like business purposes, money being borrowed, or any other purposes, which is she qualified according to the rules, So as example is a given, so that's a qualifying interest. So which is we can minus the amount from our income. So that's it. Like, some qualifying expenses, like you you spend on you're paying ACCA fees, like, yeah, that's a qualifying subscription fees. You paid it and you paid anything, and that's, which we can look around. That can be qualifying purposes. So that fees we can minus. Okay, so that's in that case, we can look around. Okay, so that's the tax is the liability of 37,000, 33,720%. Then 500 is zero. Why the 500 is zero? Because if we look there, saving income, we can look around. So 46,500 minus your, you do, I'll show you all in a calculation in a minute. Okay. Okay, because as the example being given, that's a qualified interest, like if the money being borrowed and being paid off or being used, and the interest paid on it. So that is a qualifying purpose. With the purpose of that, then interest is can be exempt. So is a given in the example as, if I'll go back to, because it's just sake of example being picked from the book, yes. So is a qualifying person, that's a qualifying interest, which is allowed to, according to, like if you borrow money for business purposes. Oh, yes, interest, I meant by saving, interest on saving. Yes, so we can look around the rates. If I'll take you back to saving interest, so what sort of the tax bracket she falls? Okay, go back to the tax rate first. Okay, so here is the saving. If the higher taxpayer, yeah, are saving income, if she borrow and invest it and she paid the interest, she can minus the interest. That's a qualifying purpose. So interest, what she paid, that 300, that's according to the example is being written, is she's allowed to claim back, the money. Let's say you borrow money, you invest the money into saving account, and you paid the interest on the money you borrowed. That's yours. That's your interest is allowed. You can, of course, you can reduce the tax liability, and she's saving, her saving income is fall if she's the basic, no tax on first £1,000 if she falls in the basic tax bracket. Yes, nil income band is first 1,000 basic taxpayer, first 1,000 is exempt, and next 500 will be the tax at the higher rate. If you're a payer of only 500, you're exempt. So that's, which we need to be look around. So qualifying is any money you borrow for the sake of to do business or for the sake of investment, and were allowed as qualifying purposes. £300 as example, that's, which we can claim that we don't need to pay interest. We don't need to pay tax on this, so we can reduce, a tax liability. Okay, so this, please, we can look around here. Hello. Sorry. So we can look around this. We have a saving income 2,000. That's all the income was. The total income came was after the total taxable income 33,700 was under the non-saving. After the saving was 2,006,000, and that's, which we can look around now, and we can calculate the tax liability for this amount. Right? Okay, so the first 33,700 is 20% because it's a 37,700 was the limit where the tax rate should be, and her income was 41 after all the income. So next, the saving income, first 500 is 0. The next 1,500 tax rate will be 20%. Yes, so because her total income is, but she can claim 500 is on the saving income is no tax. Okay, then we can look around 2,000 dividend income, and remaining, yes, so 6,000 minus 2,000, then the rate will be, because it's a higher tax bracket now, so that will go remaining. So that's, right. So total tax liability is 8,340 and tax being paid. So that's just a matter of, calculating the tax liability, and that's the way we can calculate. Okay, anybody, any question, any point you not get it, please, we can discuss, but that's the way, we can calculate the tax liability in this scenario. Okay, so then we have further is one more example, 2 point, analyze the advantages and disadvantages of different course of action. So different course of action for the tax planning can be, so we have Donald entries income is 60,000 salary income. Her income is salaries 18,000, interest 2,000, and the dividend 9,000. It is clearly from the above information. In that case, Donald is paying high rate of tax, which is 47,500 after the personal allowance. Of course, this year is the 12,570, but previous year was 12,500. So we can look around, and then in case of treasures, so we can look around, her income total is 16,500 after 12,500 tax. So in this situation, it's valid normally be the case of planning purposes, it would be advisable to invest income could be moved from higher taxpayer to the basic tax. So higher taxpayer to the basic taxpayer, any investment income if we have here. So let's look next one. So however, not possible, Donald, only the income is salary. In this, we can look around the rates, we can, tax saving can be achieved 500 of interest income made by donor, and they use the saving income nil band for 500, and this currently is being wasted. So the income being taxed 20% untreated, saving income, excess of, and rate is 1,000. Of course, we can look around within the saving, and then of course, we can look around how much tax we need to pay on the saving income. A transfer 500 to her husband, so he would use the nil rate band, and she would save 500, which is £100 she can save. So because the husband uh, don't have any investment income, so we can invest on the partner's name, and then of course, we're getting, and we can save on the tax. So if she transfer 500 to her husband, so he would use the nil rate band, and she would save £100. Anybody, any question here, please? If you have, we can look around for that in the shares we've been given, and then we can calculate, the tax liability, and we can say which one option is the best. Like if somebody's marriage allowance 12 60, which we can look around, that's and then 20% of that can be saved for the tax purposes, huh? So those we can look around according to current year, and just looking in the ways. Okay, so that's we have the benefit in that case that we can advise to client, so she can. Okay, so next 2.3, statutory obligation imposed the given situation, including implication of non-compliance. If we don't comply, so what sort of the penalty will be? Of course, we know initial penalty. If you don't submit your tax return on the 31st January 2025 of the tax year 2023-24, the penalty is £100, and the uh, return more than 3 months late, £10 per day, maximum 90 days, and return more than 6 months but not more than 12 months, 5% of the tax due, minimum 300, and then the return more than 12 months is 100% tax due. If the deliberately concealed, if deliberately but not concealed, then of course it's 70%, 5% due, tax due, otherwise minimum 300 each, which is careless. So these type of the penalties can be, and of course, which we've been, every tax year we've been given these penalties, yes, and which we can further explore, whichever year's rate you are using for the tax calculation purpose. Okay, guys, so I copy the link for you, please, if you want to look around 2023, 24. A lot of examples we have, which is quite good to use. And for assignment purposes, we can pick, we can explain, underneath of. If you want to, you can. Okay, so I can take you back. These are, if you want to look around and you want to explain these, so I can show you. Okay. Okay, so there is a snipping tool which normally what I suggest, so in your assignment, if you want to pick, like examples, you can snip that the figures as a figure, and then of course throw in your assignment underneath. You can explain, So in this case, it's finance sector which was applied, and this can transfer according to whichever task we are doing. So that can be, we can look around. Okay, anybody, any question here? Okay, so we can snip these examples. Okay, at least minimum one and maximum you can do two. But especially if you do the merit criteria and distinction criteria, compare and contrast. For pass is one is fine, no problem. For if you want to be merit, if the word is evaluate, yes, explain, assess. So these, the command verb. I'll go through the command verb document. Okay, so I'll take you back to. So these we can embed, in our assignment, and then we can use it, and according to the command word which we can. Okay. So then if we have errors of careless, as we mentioned, the penalty that can be charged, from HMRC. So that's, that we can look around amount of the penalties, 30%, unprompted disclosures. Yes, so prompted disclosures are less than equal to in term of that can be huge, for big company when they do the deliberately. So of course, the record must be and kept until and of course, we need to be keep, record accordingly. Failure to keep the record leads to the penalty of 3,000 for each tax year's concern. Yes, that can be. And then, of course, we can, if we don't keep the record, can be fine. So, and of course, inspector carry on visiting and use sometimes the judgment and nature of the business. If you don't have the record be destroyed. The payment on accounts, yes, must be made on the 31st in the tax years on the following 31st July, and the final payment of the income tax must be paid 31st January for the following years. So we can look around your payment arrangement depends, what sort of tax we are looking, and like, the VAT and all others. So we look, each separate. Late payment tax, which we can be 5% of the unpaid tax, 10% of more than 5 months, and more than 11 months after the penalty date is 15% of unpaid tax, that can be charged. So that's we need to be look around. Okay, we need to be make sure we'll comply and comply rule, and professional accountant who encounter are made aware of the matters, clearly inconsequential are judged by their natures and the impact on the financial and other. So quite crucial, yes. So we can advise to the client, depends, what sort of the client, what sort of the taxes you're dealing. Of course, we can carry on doing specific CPRD, continuous professional development. If you want to, please, if you really want to enhance your, you can do. It's good to attend ACCA or AAT network events. If you type in Google, it's called branch events. Yeah, or say network events. Yeah, network events of in your area, ACCA, AAT. You can attend. These are quite useful because, of course, those people dealing with these and they are carry on updating you and getting them content. Nowadays, of course, we can do online. Yes, because a lot of things, happening. I can show you. I can drop, those links on our Moodle page. I'll share with you on the WhatsApp as well. Quite good too. Yeah. So ACCA F6 book is quite useful. You can pick, a lot of examples. And the ACCA article, which we shared the link, like with the finance sector example, those are quite good to use for assignment. And other than that, which I open tuition handout, which I, so there are the couple of examples, like if you're doing an inherent tax and all, or corporation tax chapter 15. So we can further, I'll refer you back to, which we can go through. Okay, so then of course we can look on the merit criteria, assess the effect of the taxation financial decision made by the individual. Of course, we can look around affected by the sector, the tax, important to ensure comply with the tax obligation. It can be penalty, it can be on the public domain. Of course, the goodwill of the company can be, of course, shares can be impacted. Take the responsibility paying the correct tax and national insurance and fully comply with the compliance rule. Really, that's, which we can look around further in each case. Corporation tax is charged on the profit company make, and corporation is similar to income tax, but the company meaning they as soon as your business start making profit, it need to be start paying corporation tax at the correct rate, which is we have the 19%, but you're entitled marginally. Please remember, the when you calculate the corporation tax, depreciation is not allowable expense for the tax purposes. We have to add it back, and then of course, we have to claim the capital allowance, which we can look around according to please chapter 15, which I'll refer you back in a minute, and that's which we can look around some examples of these. Okay. So if I'll take you back first, and the chapter 15 of and look around the corporation tax. So this is the Finance Act 2023, 24, according to this book. Yeah, so we can look around the scope of the corporation tax, qualifying period, total taxable profit, TTP, which we can calculate, and thus we've been given some examples which we can rates, which we can apply. Marginal relief formula, as we discussed earlier, can be used. Okay, so you will see here the rates we've been given and the upper and lower limit and the variation. So if we look these examples we've been given here, so like we've been here and the simple limited profit is 40,000, dividend from the non-group company. So always good to be, the further rules can be, we can look around parent, subsidiary and associate. If you own other company and the group, the trading, and so that's, also need to be keep in mind, which we can look around further. The total profit we have, that dividend we have, the year for not so simple. That's the two different, yeah, from the non-group companies. And for 31st December, we've been given the total taxable profit we have for the third company, and we can look around those fall in within the group or not. And then of course is the 19% tax, corporation tax, augmented profit, how much they have, between. So we can, the benefit was 3,000. So we can look around total profit. No, this is augmented profit with the benefit in kind within the group. If they achieve, that can be. So we can look around, which is less than 50,000. So it's a small limit. So augmented profit in for the second company, which we can look around total now, and more than 250,000. So is upper limit. So we can look around the corporation tax is therefore it's a rate applied now 25% instead of 19% in that case. Yeah, that's which we can use. So these we can look around these examples accordingly, and that's quite good to look around where we can calculate the marginal relief, and we can add these examples for our merit criteria, and we can refer back to in our assignment when we'll go through those. Okay. Then please, we is good to we know there are different VAT schemes. You well, a couple of you may be dealing VAT, of course, VAT return document, the form we can fill it. We can look around annual accounting scheme if you want to. If you adopt the annual accounting scheme, your annual turnover will not exceed 100 and 135 50. So that's which we can look around 1,000 excluding VAT, and you can live on that scheme and you can stay on the scheme. Must be leave the scheme if the taxable turnover excluding what exceed 1.6, yes, million. That's which we need to be look around. And then of course we need to be pay the tax. We can do the VAT payments installment, but there can be one return in a year. That's an annual accounting scheme. Of course, the advantage, disadvantage, each scheme, whichever you use, that can be used. Annual accounting, cash accounting is quite useful scheme. Then again, the threshold and the limit. And then of course we can look around, cash accounting is quite good for the bad debts when you have, so you only pay the VAT if you receive and when you make the payments, otherwise you're not going to pay. When you're paying to the supplier or when you're receiving the cash from your customer, then you paying. If any bad debts, it can be automatically adjusted. Otherwise, bad debts rule is a 6 month. Okay, that's which we can look around. Flat rate, of course, you can choose the flat rate, just one rate you're paying, and on various, type of, and you can choose the flat rate. Uh, if no more than 150,000 your annual turnover, and then must be leave the scheme if your turnover increased to 230,000. If your turnover is more than that, you can't say this. You can switch around, and some schemes you can link with the annual return with it that can be used in with the annual accounting scheme. Okay, so we can look around each scheme, whichever, and depends upon the client, and you can advise accordingly. Okay, then we have 2D, evaluate, alternative ways to achieving the personal and the business outcome to lead the different tax consequences. Of course, we need to be look around the tax return. We can look around the annual investment. We can look around within that, a few examples. What sort of the car, what benefit you have, is it short life asset, is it man pool asset, and written down allowance how much we can claim, and the return, of course, when you, and thus we can look around advantages of each, so we can look around making installment. What are the benefit? Of course, we can look around the, if you're borrowing money quite expensive from the bank, so we can not paying to HMRC, but we'll carry on paying the interest, which is 2.5, 6. But if the borrowing money is 15%, so why we save our cash, we pay carry on to HMRC. Of course, they incur the interest on, but we can make installments, and we can carry on doing, because sometime in a business we're struggling in the term of the cash flow. So that's which we can look around the consequences of, and upper lower limit, of course, okay, so profit need to be proportion if we are closing the business, or if we have the businesses falls in, you started business in new business, of course you have to proportion the profit what fall in this our profit years and what fall in the next financial year. That's we can look around. Small medium size less than 500 employees, turnover is less than 100,000, 100 million, and the balance sheet is 86 million, and spending on research and development, 230% relief can be an increase. If we have, if the loss we have, we can make adjustment accordingly. That's further we can look around again this year. Uh, okay, so of course, the return you're well aware of. We can do quarterly, uh, each, the year end. You can do 31st July or maximum 31st January of the following years. You must do. If you don't do it, of course, it's a tax, but the tax liability will be due afterwards. Immediate. If you don't pay it, then of course, interest will be incurred. Okay, 3 scenario commencements of the trade assess using the opening years rule, ongoing business access, 12 months accounting, and closing years rule. Of course, we can look around these, the rules accordingly. And if we have there is accounting period ending, yes, is a 12-month, assess the 12-month profit, normal current years basis. If no, if it's less than 12 months, assess the profit first 12 months straight, and no, if assess the actual basis 6 to 5th April, is it the greater than 12 months, assess the profit 12 months, upper accounting date will be least, in the following of the longer period, this which can divide into different years, and we can calculate the overlap profit and get the relief, in when we see the business in the years. That's, it's a, that can be, and sometimes we need to proportion it, because sometimes we're not sure, which is exact profit in which years. We can use the proportional rule. Okay, so closing years, the final years, the year is actually sees the trade. Many, if any profit are not previous year assessed, less, any overlap profit from the commencement, we can make adjustment, and then we can pay the tax accordingly, and we can calculate the tax liability. Okay, so this is the normal for the businesses. We can look around the trading profit, interest interest, other income, property, charitable gain, or other less qualifying charitable donation if we have, and total taxable profit. We can, of course, the corporation tax is 19%, lower and upper is 25%. We can look around the interest from the non-trading source minus the interest paid on the non-trading loan and the property income we have. Then, of course, we a lot of rules change against the property. So we need to further go property, the proportion of the property, the market value of the property. That's we need to be look around. Accounting period, of course, we know the year start and end. That's we need to be overlap the profit, the gaps we can look around, they create the new overlap from the year before and the last forward and the profit that we need to make adjustment. So that's which we look when that's example by adding few example of corporation tax in our D and the consequences if not paying and planning all these we address our this and we can pick examples from these examples from chapter 15 of the book that it our distinction criteria. We can add one or two examples that will meet a requirement. Okay, that's all from our today lesson, which we learn about how we can calculate the tax and the different scenario we can pick example tax planning the legal we can advise to client and we can apply the weights according. That's all. Anybody any question, please? Okay, anyone any question, please? If you have, you feel free ask and we'll keep up to here. And please, I can, okay, so what we'll do the next lesson before we finish. So I'll quickly refer back to you, what we'll do in next learning outcome. I'll share with you and then it's good to look around. I can send you the examples. So 1 second, I'll share with you and we'll go through next. Our lesson is LO3, learning outcomes 3. And these latest slides, I'll update on the Moodle. I request to upload the latest one. Be able to apply. Yes, you can, you can submit the task separately, but after completing our delivery side, then we'll keep one lesson just for the assignment. And if you want to do side by side, you can, do it because then of course, when you look in the assignment, I'll show you in the assignment brief, then of course, each task you've been given, which learning outcome this task is related to, then of course, you can submit if you want to, but the yes, you can send it task 1, task 2, can give you feedback and then we can upload full assignment. But we'll do the assignment discussion at the end, the last lesson will be our assignment discussion. No harm as you want, So, but it's better to be, because, overall you will get the feedback as a whole assignment, but for informal you can. Okay, so this is tax planning, which we'll go through next lesson, minimize the liability, how we can do, that will be in our discussion next lesson, which we'll go through. And that's which we can look around, please. This I'll send you before that in the slides as well, latest one, and I'll update, so that's which we can go through. And if you want to look around, please, you've been given some example of old assignment. So here is the assignment brief, sample assignment available if you want to. Of course, maybe you think it's some assignment, the examples but we can add more examples. So please, when you, if you're doing yourself, like task 1, if you look in this, can you see? Hope so you can see all the task 1 is is the booklet distribution to the new clients, which we need to be look around taxation system, which is based on our underneath. If you look here, is based on LO1, learning outcome one, which we done in lesson one. Merit criteria, then distinction criteria. You've been given all the guidance there, and then task two is based on our lesson two, and then of course we'll do the lesson four. Task two will be based on is lesson two, and lesson four will be so, which we not done the fourth yet. And then of course, task three will be lesson three. And then if you want to look around, please, you've been given here guidance, what sort of things you can for merit, what things you can do for distinction. So it's good to be read that criteria, which we'll go through each, during our assignment discussions, and we'll do accordingly then. Okay, so that's all from my end, and hope I will speak you all during our next lesson. And have a wonderful week and a bit left, yes, and enjoy. Hope we'll speak you all during our next lesson. Please, you have my email, anjum@ukversity.co.uk, and we are on the WhatsApp group as well. You can even chat, and you can ask any question. And thank you. Okay, thanks for attending, and we'll speak you all. Thank you. Bye bye now.
Bye. Bye.
Thank you. Bye bye.